Yes, we are joined by David Rubenstein of the Carlyle Group. Also, our deal reporter, Cristina Alesci, is joining us this morning. Good to have both of you here.
Thank you.
David, I want to start by talking about the news of the day, obviously the killing of Osama bin Laden. I know that you've been exercising caution with your Middle Eastern investments, suspending some in Egypt. What does this news today, does it cause you to reevaluate, to shift direction at all?
Not really. We still have the same economic issues we had before this event. Obviously, every American, every person who cares about freedom is happy with what happened. But I don't think that the fundamentals of our economic situation or investment opportunities have really changed. So it doesn't affect things in a dramatic way.
Now, Mubadala, the investment arm of Abu Dhabi, owns about 10% of Carlyle. How has that helped Carlyle execute deals in the region? Because you've done about 3 deals in the Middle East as of this point. Just wondering what.
Well, it was an overall strategic relationship where they invested in our firm and it strengthened our firm, and they gave us capital to do other things. It wasn't supposed to be only an investment related to the Middle East. So yes, their access and their contacts in the Middle East are very, very valuable. But it was really an overall strategic relationship, and it's been very helpful to us.
Domestically, you have expressed real concern about the political climate here, even suggesting that the U.S. political risk is potentially as great as some of the risk in emerging markets. What's the worst case scenario? What are you so concerned about?
Well, my point really was that sometimes you cannot predict what our government is going to do. And political risk really entails not knowing exactly what's going to happen in a given country. My concerns here principally relate to the debt and deficit situation. We've got $14.2 trillion of debt, an annual deficit of about $1.3 or $4 trillion. Unless we solve that problem, we're not going to be the economic powerhouse that we've been through our lifetime.
And do you not have confidence in our political establishment to get the deal done
I
here?
have confidence in it, and I hope it can get done, but it's obviously taking a much more time than I would like, and we've struggled with this for some time. I think we need a crisis to really make people come to the table and negotiate a deal that will work. Right now, we don't really have a crisis that's forcing people to do anything.
So as part of the solution, do you see an increase in taxes and particularly an increase in the tax on carried interest?
I don't know what the solution will be, but clearly to solve our debt and deficit problem, we're going to have to probably cut spending and cut entitlements and increase taxes at some point somewhere around the next year or two, but I don't know exactly what the specifics are going to be, and nobody really knows.
But on carried interest specifically, do you see that?
Well, carried interest doesn't pick up that much money. We have a $14.2 trillion debt. Carried interest over 10 years picks up about $22 billion. So it's a nice issue to talk about, but it doesn't pick up any revenue. We have to pick up revenue that's really consequential.
Okay. Shifting a little bit from political risk to business risk, you've said that during the buyout boom about 4 years ago, that private equity overpaid and overlevered a lot of investments. And I'm just wondering, Carlyle
I wasn't the only person that said that. I think a number of people observed that maybe some deals were highly.
You've been very outspoken about
and rather colorful about the descriptions of that.
So Carlyle is now leading a buyout revival, on deals that are financed on some pre-credit crisis terms. I'm just wondering how confident are you right now that you could spot a bubble, and how do you respond to competitors who are saying that asset valuations are very high right now?
Well, we're not, in the deals we've done these at relatively low margins in terms of EBITDA prices. We've done them at single-digit EBITDA multiples, so 7 or 8 or 9 times, nothing really that heroic. Anytime you're making investments, people always will say, if you didn't get a deal, that somebody overpaid. And when we lose a deal, we say somebody else overpaid. That's natural. You never know, when you're in a bubble until it's over. Right now, I don't think we're in a bubble in the United States. I think we're really growing at a relatively modest rate. I don't really see any big bubbles in the United States. And bubbles are more likely to be in certain emerging markets than here.
So speaking of emerging markets, one of the things that you noted recently is that America's dominance of the private equity business is probably only certain for a few more years, that in a few more years, other countries, other companies will take the lead. So if not Carlyle or Apollo or KKR, then who? What countries and what firms are you looking at to take the lead or next-gen private equity?
My point was that in 1960, the United States was 46% of the world's GDP. We're now 22%. So with 1/5 of the world's GDP, we're 100% of the global private equity firms. That probably can't continue forever. But it takes a long time to raise money for private equity firms. It probably will take 3 to 5 years before a private equity firm emerges in China or Brazil or the Middle East that can rival the large American firms.
And is that where we should be looking to for the next lead? China, Brazil?
China, Brazil, and I suspect India and the Middle East will probably be sources of great global private equity firms in 3 to 5 years. In the next couple of years, if any place emerges as a place where global private equity firms are built, it might be in Europe, because there are some very good firms there that could expand and become global.
The U.S.-based managers are growing themselves predominantly through diversification. I'm just wondering, Blackstone's biggest business, for example, is now real estate. Carlyle bought a fund-of-funds business recently. Just wondering, why diversify? Why not just add more private equity funds?
Well, there's a limit to how many private equity funds you can have. I mean, how many buyout funds can you have in the United States or in Europe? So if you want to diversify your business, as most businesses like to do, you might go into some line extensions or things that you have some expertise in, or likely expertise, but isn't quite buyout. So we have done things like buy a hedge fund or buy a private equity fund of funds, and we will do other things like that, no doubt. And other people that compete with us are doing the same thing.
Can you comment a little bit about how fundraising in the private equity world has impacted your decision to diversify? In other words, what I'm essentially saying is it because of the tough fundraising environment that we see in private equity that firms are deciding to diversify into other businesses?
Well, it's not just fundraising is tougher than deal doing right now. Fundraising hasn't come back at the pace that deal doing has come back, where distributions have come back. It's much more difficult than it was several years ago. It's certainly much more difficult than at the peak of 2007. But all of us are diversifying, because in business you want to not put all your eggs in one basket, and many of us think that by diversifying we can offer to our investors many different things that they want. Firms tend to like our way of doing things and may like KKR's way or Blackstone's way, and if so, they will like to buy other things or invest in other things that those firms offer if they have products that are seen as comparable to the kinds of things they've already liked.
And is fundraising equally challenging kind of across the globe right now, or are there certain markets where it's a little more robust in terms of fundraising?
I'd say the United States is slower because the public pension funds, which have been the big source of capital for people like us, are relatively over-allocated, or they don't have as much money as they used to have. So the sovereign wealth funds, where they are in the Far East or in the Middle East, tend to have more money and are probably a greater source of capital. Also, high net worth individuals now are coming back into the market, and they are a pretty good source of capital as well for people like us.
Just staying on the diversification issue just a bit more, are there businesses where private equity managers should not diversify into?
Well, I think if you're a private equity manager and you were really a specialist in adding value here in the alternatives business, so we tend to want to be in alternative investments, things that are where you can add value and presumably benefit from that. We are probably not going to, and I don't think you're going to see a lot of these managers go into traditional asset management businesses, long only, or things that don't have some kind of carried interest associated with it, or something that shows that they were really working post the investment to add value.
I'd like to talk to you a little bit about shareholder activism, both from private shareholders and public shareholders. I think you said recently that much the same way we saw revolutionaries in the Middle East to use social media, use Twitter and Facebook to press their cause, you actually think that shareholders may go online to press for real change. Do you really think we're going to see corporate governance issues and shareholder activism move online, and what would that mean for businesses like yours and for corporate America?
I'm not certain, but my point was that if social media can move governments and change governments and effectively almost overthrow governments, it might not be impossible that those same tools could be used to change corporate events. So if you've got 500 or 600 million people on Facebook, presumably a large number of them who might be shareholders in Company A or Company B will use those devices to maybe effectuate change in a company. Now, that probably will have more impact on a public company than a private company, but there's no doubt that this social media has great implications for the corporate world. We just don't know what they are yet.
Now, speaking about shareholders, there's some talk that Carlyle will have public shareholders of its own one day. I'm just wondering, these stocks really haven't had that much of a fantastic track record in general. Why have private equity firms decided to go public?
Well, I think some of them have decided to go public because having stock enables you to retain and recruit employees. having stock enables you to make the kind of acquisitions that are the line extensions I earlier talked about. And there's no doubt that there's a monetization effect for people who work at these firms. People who built these firms over a period of time would like to monetize the effect of what they've done, mostly to give away the money. Most of the money that is being raised by the large private equity firms that go public, that money is largely going to go to philanthropic purposes. So it's not like people are buying houses with it. They're really giving it away.
And what are the criteria that you would like to see in place before you decide to take the company public?
Another company public?
Yours.
In terms of ours, well, we've looked at it for many years. We haven't really made a final decision. Clearly, you want a market that thinks that private equity firms, if they go public, are an attractive investment. And so you want an attractive economic environment, but we haven't made a decision yet. And I can't say that the current environment is exactly perfect for what we want, but we're looking at it.
David Rubenstein, thanks for joining us. Nice
My
to have you
pleasure.
with it. We'll look forward to hearing your panels.
My pleasure. Thank you very much.
Later on today. Cristina, it's always nice to have you. You're
Thank
going
you
to
for
continue to
having
stay with us through the next 3 days. So
Thanks,
good to have you here as well.